Welcome to our channel, and more importantly, welcome to another free stock market breakdown video that we release every Sunday at 2 p.m. Eastern Standard Time. In these breakdowns, we will cover the latest news developments that will affect the market, as well as break down the broad market and other instruments for opportunities that may be brewing this upcoming week. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content. Also remember to turn on our channel notifications so that you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so that you never miss any important market news. All important links to our channel are in the description below. Let's get right into it. So there hasn't been many developments this week in the US market, but the biggest one happens to be Google getting an antitrust lawsuit that they have to respond to by December 19th. So although this may not be an immediate problem, this could pose challenges for the company in the future and could definitely affect the market, the overall market, as well as Google's stock, because Google makes up a huge portion of market capitalization of the S&P 500 and NASDAQ indexes. So if there's any sort of regulation put in place to slow down Google or separate them in any form of way, then this is definitely going to have an impact on the broad tech sector, because those laws may not just apply to Google and possibly other technology stocks such as Facebook, Amazon, and Microsoft. So it's definitely something to keep an eye on to see what develops in this particular instance. So let's move over to the charts now, and starting off with the US equity, the S&P 500. We can see here we still have in our analysis from last week. So as you can see, we was expecting an upside move from where we was trading at the end of last week. However, this setup failed and we had a breakdown below the trend line and below this zone that we was looking to get the bounce from. So as I mentioned last week, we should be very cautious in this area. I did not take this trade because I did not see any positive news come out about the stimulus talks, which would have probably sent the markets higher. As you can see, we've essentially done nothing over the past week in the S&P, and that's just because a lot of things are going on right now in regards to the election, and so there's nothing really in the markets to make it optimistic and send it even higher. We always have to remember that the markets are fundamentally driven. Supply and demand theory holds, and so at this point in time there has to be a reason for people wanting to purchase stocks at a higher price, and if there's nothing in the market that's allowing them to have that overall good market outlook, then it's just not going to happen. But if we do happen to get that stimulus package passed, then we will be looking at taking another upside move. So this trade idea is still valid. However, we just have to take into account and be patient and wait for the setup to come into play when the stimulus package does get passed. Another thing I have noticed while looking at the S&P chart is that we can actually redraw this trend line to look a little bit more like this instead, having the three touches at these 3 points here, and that is just a better outlook on what the market is doing currently. So we always have to be flexible with our analysis and readjust our trend lines, and obviously change our bias depending on what new information comes into the markets. And so it's just an important point to note that although my analysis does change a lot, that is mainly because as more information is revealed, I'm going to change my outlook to match that. So even though this setup is still valid, I'm just still waiting on those stimulus measures to come into place so that I can take this trade, and I won't do so until I know that the bill is much closer to passing than now. On the other hand, some of the larger developments in the market this week have come from the UK market once again. So as here reported by Reuters, UK's consumer sentiment has fallen by the most since the start of the pandemic. And as you may have guessed, this is due to the impeding lockdown restrictions that they're starting to impose in different parts of the country. So obviously this is going to have a huge effect on not just consumer confidence, but also consumer spending, which could play into our hands from what we were talking about last week about a possible downside move in the UK 100. So it's definitely something to keep an eye on. All the stars seem to be aligning for a fall in the UK market, and this is just another article that's come out this previous week that is lining up to our theory. But it's not just the UK economy that's getting hit. The European economy is also getting hit quite hard, as they have seen a huge surge in cases over the past couple of weeks, and even more so in the past 10 days. So this is definitely concerning for the European markets, and I assume that they'll be reacting to it as well. We'll take a look at the European market as well in this video, just so that we can have an idea of what may be going on and to see if they're reacting to this surge in cases. I know that certain countries, specifically Germany, France and Spain, have started imposing a lot more restrictions on their citizens in different parts of the country, similar to what the UK is doing. So this could definitely have an influence on what may be going on in the stock market over there in Europe. Now taking a look at the UK 100, we can see from our analysis last week that not much has changed also. A lot of the markets have been quite flat this week, but the analysis from last week still holds and we're still looking at a downside move. We are just waiting for a more convictive move in the market to take a trade. You can see that we had a push down earlier in the week followed by another push up. So you basically have closed the week out where we started with a break back above this trend line. So looking at a sort of a short-term play that I would be looking for here is that this is a fake out. So essentially this is used to trap people who are looking to go short. So there is a slight possibility that if there's some positive news for the market this week, that we could get a kind of push up in the UK 100. But also remember, the long-term picture is that we're in this downtrending channel. So any moves upwards in the UK 100 are just short-term corrections and pullbacks to the upside in this longer lasting downtrend. Just because of everything that's going on fundamentally right now, I'd be very skeptical at taking longs in this market, even on just a short perspective. So even though I feel as though this may go higher, I won't be taking any trades to the upside until we get to maybe this point, which is where I'll be able to take a short with a much higher probability of it working out with my stop just above the channel limits and my target slightly down here for around a 2.6 to 1 risk to reward ratio. So in trading, you definitely have to look at your more high probability setups and be patient, and don't try and jump the gun and get ahead of moves, because you end up losing money that way. So I'm going to wait for the more higher probability setup because the fundamentals are on side for the downside move, and I'll wait until we get up here and possibly get some form of catalyst, like some bad news, either a no deal Brexit is confirmed or some other negative news, to trade this, because everything just seems to be lining up. So now we're going to take a look at the DAX, because we saw some negative news come out from the European markets, and the DAX is essentially the German stock market, and I'm going to do some technical analysis here on stream just so you guys can see my thought process behind building a trade idea. So what I'm going to do is I'm going to draw in my daily support and resistance zone right here around the 13,000 level, change it to red because I always color code my zones, red being my daily zone. Put it in red because that means don't take any trades right up against this resistance. But yeah, we can see we have this proper daily zone here, and then our next daily zone is going to be further down around the 11,750 level. So if we're looking at any targets, we'd be definitely looking at this target here around 11,900. So how exactly would we take a trade down to this zone? Looking at the chart here and dropping down to the 4 hour, I'm going to draw in my 4 hour zone, which definitely seems to be here around this 12,500 level. Make it a little bit more accurate here, and as you can see, this is exactly the spot where we had a bounce off of earlier this week. So this is significant because you can see that price is respecting this zone, and so the only way we'd be able to take a trade idea down to this daily level around the 11,900 level is if we got a full break, close, and a 4 hour retest of this zone, which would give us a trade idea back down to this daily zone. So the only way we'd be taking this trade is if we saw an actual price action pattern that mimicked what we have drawn here. This would give us around a 2.3 to 1 risk to reward ratio. But obviously this move is got to be driven by something, and that's going to be some form of fundamental news, such as even further rising cases happening in European markets, or further restrictions and lockdowns being imposed on citizens of the country that would slow down the economy. So essentially, if we get something like that happen this upcoming week, such as even more restrictions and a break below this zone, then we'll be looking to take our trade idea on the retest down to the daily zone. So the last instrument I'm going to take a look at is for you guys that like to trade the currency market. I'm going to take a look at the most popular currency instrument, and that's the EURUSD. So as you can see, I've got my zones, my daily zones highlighted in red, my 4-hour zones in blue, and I've got my levels of significance here in green. So although this isn't really my most favorite instrument to trade, I'm going to cover it just for you guys that do enjoy trading it. And what I've seen, or what I've noticed, is that we've been range bound for quite a while now, and we've been range bound between around the 1.17 level to the 1.2 level, and I don't expect anything to change. If I'm looking to get back to the top of this zone, which is highlighted in green up here, then we'd be obviously looking for a breakout, a close, and then a retest of that level, and we take our trades from here back up to the top of the zone, and that would give us approximately, just guessing it, maybe a 2 to 1 or around a 2.3 to 1 risk to reward ratio. And then the inverse is true. If we get a breakdown, we'd be looking to take our trades back to the bottom of this zone, which would obviously give us a more favorable risk to reward ratio. But at the end of the day, you know, follow your strategy and do what your strategy tells you to do. But that's essentially what I'm looking at for now in the Euro USD if we're looking at the 4-hour. And with that being said, I understand that a lot of people who watch my videos don't just solely trade the stock market, but also trade other instruments such as currencies. So I'm definitely open to continuing to put out videos covering other instruments other than just the broad market. And if you guys want me to cover any stock or currency in particular, just drop that in the comment section and I'll make sure to get back to you and do a video on that specific instrument. With that being said, this concludes our stock market breakdown video for the week. Thank you to everybody who took the time out to watch the video, whether it be part of the video or the whole of the video. I aim to continue to develop these videos and bring high quality content every single week. I'll also be posting educational content on the channel, and I have another video coming out on Tuesday covering the recent stock market rally that we've seen, and this is suitable for both beginner and experienced level traders. If you haven't already, help us out by dropping a like on the video and subscribe to the channel so that you don't miss out on any of our future videos. Thanks and peace out.